let's look to the issue of dark trading. Dark trading caps, they're due to come in on January 15th, but Bloomberg has heard you might be bringing forward the implementation date to January 12th at 7 a.m. Is that true?
Well, as you say, Nejra, the MiFID II made a good start yesterday. At the same time, it's important to realize is that MiFID will have longer-term impacts. Some of the impacts of MiFID II were already visible in the past weeks and the past months, for example, regarding the unbundling of research and execution, while some other impacts of MiFID, including moving more to liquid trading, will be more visible. We expect to be more visible in the time ahead.
Regarding on the dark trading,
the double value.
On the dark trading,
yes.
Are you bringing forward the implementation date of the caps on dark trading? Are you bringing that earlier to January 12th?
No, we keep to the line as we have agreed earlier upon the deadline to start with the double volume cap. We are currently collecting the data on these issues. We're getting that at ESMA, and we have not changed our plans regarding the timeline in that respect.
OK, so no major glitches on the first day of MiFID II, as we've established. Some concerns surfacing, though. As you know, stock exchanges have been very vocal about rival platforms, systematic internalizers taking volume from them, despite the MiFID II caps on dark trading. Now, ESMA has tried to address this by basically proposing to extend the tick size pricing regime to systematic internalizers. But the thing is, Steven, it looks like the EU Commission is going to move slowly on this. Will you push the EU Commission and national regulators to move faster?
Well, as you say, Nejra, what is very important is that we make sure is that we have the right balance and a level playing field between the so-called SI regime and trading venues. We know that the SI regime is attractive for meeting the trading obligation for equity shares. At the same time, we need to make sure that it's not used as a kind of a way around the objective of getting more transparency to the financial markets. We have in the past already issued Q&As on these issues to make sure that there is this level playing field between the SI regime and trading venues. We have given advice on this to the Commission. And we have also, according to the regular timetable, changed the technical standard, or made a proposal for a change of the technical standard.
Yeah.
And that is currently under consultation. And so far, we are on track with that change, but obviously we need to see what is coming back from that consultation and then take this issue forward.
Steven, will stock exchanges lose out in the medium to long term?
Well, as I just said, some of the longer-term impacts, we need to see how it develops over time. But clearly, this is geared and has the objective of increasing transparency in the financial market. So in principle, stock exchanges should be winning in that respect. And if there's any indications that these original objectives are not met, we will look in our toolbox to see whether any further changes are needed.
OK, now you've been making tweaks to MiFID II. You were doing that even close to the deadline. You gave a 6-month grace period to firms without LEIs, the code needed to trade. But this nonetheless actually caused some issues on day one, as some market participants had already set up systems to reject those trading without the LEI code. How should this be resolved? Well, the LEI code is being, in terms of making sure that all issuers and all market participants and all counterparties have this LEI code. That has been a key element of MiFID II, to make sure that regulators can better identify those that are trading in financial markets. Despite the fact that this code was already, or the LEI code and the requirement was already known for quite a number of years. It is easily available. We saw a very slow uptick
of asking for these LEIs. In recent weeks and recent months, we have seen a very strong increase of the number of LEIs that are requested by market participants, so that is encouraging. At the same time, we thought it was appropriate to have some targeted relief for specific issuers that are so-called third country issuers. And in addition to that, in case a investment firm gets the mandate to ask for the LEI on behalf of his or her client, we also accepted that to allow trading.
How much time, Steven, will you allow for teething problems with MiFID II? 6 months, 1 year?
Well, I think what is important to realize is that the implementation of existing legislation is to some extent something that continues over a longer period of time. Markets are dynamic, there are new innovations, there are new developments. And I think that is precisely the reason that, that an authority like ESMA has the power to change their technical standards. It makes us and the regulatory system more agile to respond to developments in financial markets. And so I don't think there will be at one point in time a full stop of any new Q&As or changes to technical standards, precisely because we know that financial markets are changing, there's innovation, and we need to make sure that rules and regulation adjust to these development in practices.
Yeah, fine. And so far you have ruled out the prospect of a MiFID III. But let's move on from MiFID II, Steven, and talk about regulatory arbitrage. Firms like Brevin Howard and Tudor giving up their MiFID licenses this year for firms covered by other regulation, for example, AIFM and UCITS. How will you ensure that these firms comply absolutely with MiFID II regulations?
Well, it is important to realize that by far the largest part of MiFID II will be supervised at a national level. That is a task of the national supervisors. Obviously, the supervisory practices at national level are frequently discussed in the board of ESMA, where all national regulators around the table are around the table. And if there's any concern about unlevel playing fields, or where they're either across, let's say, sectors of the financial markets or between national markets of the EU, typically these issues come up in our table, and we take it forward and see whether any measures are needed.
Finally, on Brexit and the fund management industry, and specifically the issue of delegation, that's the structure now where EU funds delegate management to London. ESMA has called that structure into question. Are UK portfolio managers going to have to move to the EU en masse?
I think it's important to emphasize, Nejra, is that what we have said on delegation and regarding the fund industry is it is not calling into question in any way the delegation model, but what we have said is that when you delegate, is that it needs to meet the regulatory requirements, and these regulatory and also supervisory requirements are there to make sure that the entity which is located in the future in the EU 27 and subsequently delegating activity outside of the EU 27, for example, regarding to London, is that this is done on an appropriate basis, and that there is sufficient substance in the EU 27 where the fund is registered, that this is a supervisable entity, and also that this entity in the EU 27 is really the place where management decisions are taking place.